The morning report for the 13th of April 2010. Last night we saw the US market close above 11,000 points. This is the first time since September 2008. Bit of a milestone. Although the market didn't move much overnight, up 0.1%, S&P 500 up 0.2%, the Nasdaq up 0.2%. The FTSE was up 0.1%, so pretty much all overseas markets were fairly flat and steady, apart from the close above 11,000, which was a little bit of a milestone there. Now, our market closed up 0.7% yesterday, closed at 4,984. It pushed very close to that 5,000 level, but wasn't able to quite make it. Now, today I expect to see the market hover around these levels. Again, as we saw with overseas, there wasn't a lot of news flow coming through, and the market will stay in this 4,980 level. Now, we can expect that there might be a pullback in the markets, having a hard time pushing through 5,000. Though, like I've been saying, I think it'll be higher lows from here, so I wouldn't expect to see the market get much lower than 4,700. Probably an opportunity to pick up and buy a bit more stock for those who are not fully invested yet. But again, it's a good sign for the market, and for my money, I think we are looking to see the market move higher above 5,000 and start knocking on the door of 5,200 in the next 6 to 12 months. Now, the gold price was steady, closing at $1,162 an ounce. Oil was down 1% to close at $84 a barrel. And the Aussie dollar did lose some ground yesterday, down 0.7 to close just under 93 US cents. Now, the big news, obviously, since Reserve Bank meeting earlier this month has been interest rates and the concerns on interest rate hikes being pushed through to homeowners. What's this going to do to the housing market? Keep in mind, the housing market is a large part of employment inside of Australia, so it is obviously a very big topic. Now, the interest rates are still sitting below historical levels, but the Governor, Glenn Stephen, has sort of indicated that they are looking to get interest rates back to the mean average interest rates. So we can expect to see some more hikes in interest rates in the next couple of months, or certainly towards the end of the calendar year. However, it may not get as high as some are predicting of 10%. But at this point in time, the situation for historical low interest rates has seemed to pass, and certainly we are looking to move back to something around the average level. So if you've got a big mortgage out there, start having to think about that. And certainly if you're looking to borrow for money, you may want to factor in some more rate rises coming through. For more information, go to our website at growyourwealth.com.au.